In the latest market update, we delve into the SPY daily chart, highlighting its challenges and breaking through the 480 resistance, forming a potential double top pattern. The past 2 weeks have seen a struggle, and with finance stock earnings falling short of expectations, the market ended the week on a cautious note. As we anticipate more financial stocks earnings in the coming week, there's a concern that we might witness a repeat of the challenges faced this week, possibly leading to a further downturn in the SPY ETF. The RSI divergence observed in the SPY chart adds to the caution, suggesting a potential downside in the upcoming week. Despite a recovery from previous week losses, the SPY is now back at a crucial price level, hinting at the possibility of a local double top formation. Shifting our focus to the QQQ ETF, we observe a parallel scenario to the SPY with indications of a local double top formation and RSI divergence. Interestingly, the upcoming tech stock earnings in a couple of weeks add a unique twist to the market dynamics. In contrast to the struggles faced by SPY due to finance stock earnings, QQQ might exhibit more resilience given its lower exposure to financial stocks. This divergence in finance sector exposure could potentially influence QQQ to hold up better compared to SPY in the coming weeks. However, an overall sluggish market sentiment is anticipated until the onset of tech stock earnings. In this thorough market analysis, we shift our attention to the IWM ETF, which has been exhibiting a sideways trend throughout the week. Notably, IWM has been grappling with challenges for several months, struggling to regain momentum. The current market sentiment surrounding IWM doesn't seem to be indicating any imminent positive developments for the upcoming week. The persistent sideways movement suggests a continued struggle for IWM as it attempts to find solid footing amidst the market fluctuations. As we explore the intricate dynamics of IWM, we anticipate a choppy trajectory in the coming week, with the ETF working to overcome the hurdles that have hindered its upward momentum. In the recap of last week's market activities, the DIA ETF stood out as a notable performer among other index ETFs. However, the current week brought about a change in momentum as DIA faced speed bumps, primarily attributed to the fall in Boeing stock. This shift led to a sideways movement in DIA's trajectory. Despite the temporary setback, an interesting observation is the presence of RSI divergence in the DIA chart. This divergence introduces an element of uncertainty, making it early to definitively predict whether DIA will experience a pullback or resume its bullish run. As we assess the current market landscape, it appears to be in a non-decisive state, eagerly awaiting the influx of earnings reports in the coming month. Tech stocks, constituting 30% of the SPY weightage, hold a pivotal role, making upcoming tech stock earnings crucial for the market's trajectory. Looking ahead to the next week, the absence of major tech stock earnings leaves the finance sector to determine the market's fate. Reflecting on the trends observed this week, there's a likelihood of the market maintaining a sideways movement or experiencing a slight pullback. It's important to note that Monday is a holiday, resulting in a condensed 4-day trading week. Stay tuned for a nuanced analysis as we navigate through this period of anticipation, keeping a close eye on the finance sector's influence and the evolving market trends. With tech stocks on the horizon and a shortened trading week ahead, the next few days hold the potential for market dynamics to shift, impacting investment strategies. Thank you. Wishing you a fantastic and relaxing long weekend ahead. Stay tuned for our upcoming market updates and enjoy your time away. If you have any further questions or need insights, feel free to comment. Have a great long weekend.